There we go. So we tap into that sell side. I mean, look at that, right? Look at that precision there. We trade through it, close right on that low. Right, next candle opens right on that low, and immediately what? Shoots higher. Now see, do we want to retrace from here, kind of seek and destroy, or do we just trade into this balanced price range level here? So this swing low, right? Trade back in and fully rebalance this candle, so an immediate rebalance of this candle. After doing that, now we would want to see if price continues to sell off then. Go ahead and move these. Dollar looks like it may want to continue to rally, right, which will send ES lower. See what the 2 minutes looking like. So if we do want to keep selling off here, what are our future targets? Let's go ahead and look at that. So we have this low from yesterday. That would be target number 1, trading right near that right now. Swing low number 2 would be here. Right, so this swing low. So as you see, we just attacked now that swing low from yesterday. So sell side met here. Now we wait, right? Do we keep expanding now into our other swing low here? Or if we want to trade through that swing low, ultimately closing in this fair value gap, then we can look for this fair value gap. And if we really want to get animated, right, we could see us trade. Honestly, attacking lows, all these lows really, on a daily. Yeah, we could see us fully close in, right, both of these daily fair value gaps. But we'll go back to that lower time frame. So we attack one sell side level here, have now just attacked that second swing low that we marked out. As we saw right after immediately rebalancing this candle, trading into that balanced price range, we reject, trade lower. So if price were to want to remain bearish this morning, I would look for us to hold now from this fair value gap that we created here. So after breaking below an old swing low, right, with the candle closing bearishly at the body, I would look for that most recently formed fair value gap to continue to support price if we want to keep attacking, right, these sell side objectives. So we trade up and through this one here on the 1 minute. I want to see if we can get back inside of that. On the 2 minute, right, we have this fair value gap here, fell just short of it, so created equal highs at this level. But yeah, we'll see how this 2 minute candle closes. So notice how that 2-minute candle, right, even though there's no fair value gap here, on that 2-minute candle closes right in line with that 1-minute fair value gap. Dollar's continuing to rally, right? It just took out its high actually. So I'd really want to see ES accelerate from here and trade lower. Right, NQ is also looking to attack its low now too. So I'd want ES to follow suit here. Dollar still rallying aggressively. So we expect ES to continue to sell off, opening with that volume imbalance. So now I watch, right? Quickly, as we tap into the close of this candle like we just did, I would want to see this candle move away now and close bearishly and leave that volume imbalance that we created open, right? Not do what it's doing here and close bullishly, closing in that volume imbalance. With dollar rallying so aggressively, right, ES should also be moving lower fairly aggressively, but still very kind of just mixed this morning. So 20 seconds till this candle closes. As we mentioned, right, do we see it can trade into this fair value gap again? I would like for this candle to close bearishly. So we actually closed just right on the opening of that level. Right, that's permissible for me, that's fine. I would have liked to keep it open, but closing rather than close is okay. Still respecting this fair value gap. Creating equal lows here perfectly. So just looking for now a stab through this low. See if we want to reach into now, right, that higher target, higher time frame swing low. Dollar still rallying. There we go. So now we run this low. See, right, do we accelerate, trade into the swing low? So now this up close candle, this most recently formed up close candle here, right, I would see as my order block. And if we were to remain bearish, I wouldn't want price to now trade back above, ideally even the mean threshold of that level, which is almost right in line with the mean threshold of our original 1 hour fair value gap here that we used. NQ failed to take this low, right? So when ES dived lower here, NQ actually failed to take its low. So we could be creating an SMT type of scenario. But remember, we still have this 2-minute fair value gap that was untouched here. So I would like price to hold at that 1-minute order block. Right, I would still allow a retracement up into this fair value gap and look for another leg lower. Right, just because we have that balanced price range here. If we were to trade through this 2-minute fair value gap, then I would be wary of us trading lower, and we may have created just a reversal for the morning session here. Move these just so it's not so cluttered. But remember, right, we're just looking inside this up close candle, so that's what that shaded area is. And then this is that 2-minute fair value gap as well as the balanced price range here. Notice the bodies, right? Closing perfectly in sync with the high of that fair value gap. Want to see us trade now back below and through it and not use this fair value gap as support. Right, because if we find support here, that might be the market just tipping its hand that we're going to start rallying, looking for higher prices. So notice how we're failing to close below this after trading up and through it. So if we trade into this higher fair value gap here on that 2-minute, right, ideally this balanced price range, the higher this fair value gap would be my limit for seeing price retrace before creating another leg lower. Right, anything higher than that, really anything higher than 40.20, I would then look for us to probably trade back into this 8:30 opening and potentially back into that new week opening gap low. Right, notice the bodies of these candles respecting this old low beautifully. So like we mentioned yesterday, right, after creating that move, trading into our sell side targets, we can expect some sort of consolidation, right? We're bouncing in between PD arrays. So now we have to wait and see, do we continue to sell off attacking our sell side targets, or now do we get that reversal? So after trading into sell side liquidity levels, that's when you can expect the consolidation to occur. Really sell side or buy side. Any type of large liquidity pool, after trading into and engaging those stops, I'll often expect some form of consolidation. If we don't though, right, and say that we traded into this here, and once we close this fair value gap and we're balanced, we traded away heavily, right? Those are the days when I kind of expect us to have a large range day, right? That's the market tipping its hand that, right, we're probably going to trend and being a trending environment. But since we are consolidating here, I'm expecting more of a just a slower session. Just for a reminder, right? You guys are always free to just type any questions you guys have or anything in chat. I'll do my best to get to them when I see them. Well, we have a lot of free time most mornings just reading price, so should be able to get to most questions. So we've traded now below, candle body closing below this fair value gap. Now we're using it as resistance, right? So I'm monitoring to see, do we continue to hold below this fair value gap and send us lower? NQ looks like it wants to attack its lows. Dollar retrace is now trading into a breaker, a bullish breaker the dollar is trading into. So right, we could see the dollar continue to trade higher, which would, right, give assistance to ES selling off. Still just more in price action. Right, still playing inside that fair value gap. So DXY, if we take a look now at these lows here. So from this low to this swing low, right, we have SMT with NQ. NQ made a lower low while ES was failing to. So we're trading into that balanced price range now. I would want to see this price respect these levels, reject from here, and trade lower. If we were to trade through this with displacement and kind of create now a bullish fair value gap through this 2-minute fair value gap, my bias kind of would lean more towards higher prices at that point. So far so good though, right? We trade into the top of that fair value gap perfectly. So we tap right the top of that to the tick and then trade now back below and under the balanced price range here. So just continuing to monitor how does price react inside of this area. See on a 2-minute. What high time charge do we have? So I usually have, right, the 4 charts I have up at most times are this 1 minute, a VS, and then I have 3 other screens and then like a computer. So I'll have the 1 minute chart open, I'll have a 15-minute chart open of ES, and then I also have the NQ and the DXY as well. So those are kind of the things that I'm looking at most times. Just using the, right, I don't really trade NQ ever or DXY. I just use that to gauge, right, how ES wants to move. Really more of a confluence, just to give me extra confidence behind the trade setups that I'm looking at. So right, we create this volume imbalance as well as this bullish fair value gap as we trade up and above this 2-minute fair value gap here. So that makes me think that we may want to revisit, like we mentioned, that 8:30 opening, ultimately the new week opening gap low now. If that's the case, so we'll go ahead and move this 1-minute fair value gap served its purpose. Right, we move away from it. So now I would expect if we want to remain bullish and attack these 2 levels, that this fair value gap now would act as our inversion fair value gap. And we wouldn't need to trade back into really the low of this candle. So yeah, we have that 1-minute volume imbalance here. So ultimately, if we trade into like this volume imbalance, I would want to see price hold there. Because why, right? We traded up into this balanced price range and hit the top of that fair value gap. So if we wanted to remain bearish at that point after closing below the BPR, we could have started moving away. But since we tapped into that once, retraced, and then still pushed up and through it while also creating that volume imbalance, that kind of makes me think that, right, we're going to see a more bullish order flow rather than another sell-off. On the higher time frame still, right, we're trading now inside of this original, though, fair value gap. So that's kind of what makes it, right, a tough read, is that we could still trade into this fair value gap, create some sort of shorting pattern, and then attack that low. But right, if I had to lean one way over the other, I would want at least that 830 opening to be traded into, just because, as I mentioned, we created SMT here at the lows with NQ. Take a good look. The dollar's actually starting to rally now, though. Right, NQ took its high here. Yeah, so really just between these two PD arrays. So I'd be watching here to see how we react, to give me more information. Right, if I'm bullish, I want this fair value gap here to hold. As you see, we trade back into, right, that balanced price range, close on it beautifully. Traded below this volume imbalance, so I would like to see us trade back up and above it. If we use this as a inversion fair value gap, right, and price kind of respects it bearishly, then I would look for more lower prices. In terms of FM2, how do you know which one? So, right, I guess I wouldn't really say I know which one will lead. I simply use it as more of a tool to tell me when that manipulation is like taking place. So, right, so when like we run this low here and then fail to create this low here, but NQ is running its low, I guess technically, right, you could say then ES would be the relative strength leader. But I'm just looking at more for the tool itself of understanding, okay, NQ ran its low while ES failed to. So that could just be a sign that, right, NQ is being manipulated while ES was being held prior to that run higher. So as you saw, as we mentioned, that 2-minute fair value gap, if price wanted to remain bullish, gets traded through lower after trading into, right, the original bearish fair value gap that we had mentioned. As you see, right, notice how that volume imbalance that we wanted to see hold price as after we trade through it, right, we trade back up into it, but price then finds resistance at that level, so it creates the inversion volume imbalance. And now, right, we're heading towards that low once more. So this would still be the original, right, area we're looking to see price trade into. So as we break back below this fair value gap, now I'd look for this fair value gap to act as a area of resistance. Right, so we just ran this low. So if we want to dig into this low, you could see us, right, retrade into this fair value gap and then ultimately dig into this, right, 15-minute swing low, just to remember, right, it's this swing low here. Yeah, if there's people with like mics on, I think you could just mute them yourself if they're having an issue. So notice how we just sweep this level, right? We don't close below it. Simply attack those stops. Now, like I mentioned, if we want to remain bearish, I'll look for us to hold here now at this fair value gap. So dollar actually just rallied and took out its high. NQ took out its lows and is starting to retrace. So we actually could see, right, this could be our run on sell stops before that retracement now. If this candle body was to close above this fair value gap, I would then look to see, right, if this fair value gap offers support as we trade into it. See on the 5-minute, we got so now really just stuck between, right, these PD arrays. Trading back into this 2-minute fair value gap. If you look, right, there's actually a tiny, so within this 2-minute fair value gap, there's actually a tiny fair value gap right here. And you see, right, that's what price traded into here with this candle, tapping it to the high perfectly. Right, sending us lower. So now I would want to watch and see if this candle was to close inside or below this fair value gap. Right, we could see another leg lower, reaching into our 15-minute swing low. So right, we had a run on these stops here, but it was a very shallow run. So we could see another dive down to actually clear out now both of these lows, which are the relative equal lows. Because NQ is just continuing to sell off. Dollar is continuing to rally. So that would kind of like tip its hand to me that I would want to see ES follow suit and continue to sell off while dollar rallies and NQ sells off. See, we open with this bullish volume imbalance. So in this instance, right, because I'm aiming more towards lower prices, I would want to actually see that volume imbalance be closed. So I wouldn't want this candle to remain bullish. I'd want to see us overlap, close bearishly, really not leaving behind that volume imbalance. I got stopped out on that 2-minute fair value gap. This one could nope. This one here. We trying to short this one, Omar? I'm guessing. Which is, right, like we mentioned this morning, we're probably going to see low probability conditions just because we traded into our sell side already. NFP week is coming up. Right, in the morning opening kind of showed, right, with the mixed averages that the markets weren't really in sync, so it could be a very choppy morning session. So right, how I'm seeing now, as we mentioned, that volume imbalance gets closed in. That's what I wanted to see. as we remain inside of this fair value gap. So I just want us to continue to find resistance here. Dollar still continues to rally, and NQ still continues to go lower. So yeah, right, when if in high probability conditions, right, this was a just an ideal environment to be trading in, and all the markets were aligned, right? ES would be trading lower already and attacking its lows as NQ was attacking its lows, and the dollar continues to rally. But kind of like we mentioned yesterday for power hour, when we see, right, the average is not really aligning, that kind of tips its hand that the market's under some sort of manipulation, and the high probability setups are just going to be harder to find in that instance. Add to that, right, it's the first week of the month, also NFP week on Friday. So a lot of things leading to this week just not being the cleanest, right? There's still clean runs, still can find 5 handles real easy, but just a lot higher resistance, right? We're not getting those clean expansions, easy runs on liquidity, right? Because NQ still continues to trade lower, but ES has just been in this range here, right? Stuck inside this fair value gap. If you notice where the candles are closing, all right, take that consequent encroachment. All right, candles are respecting that level beautifully, closing right below that consequent encroachment of this fair value gap. So still leaning towards that same idea of, right, I want to see ES catch up to NQ and take out its lows. But if we just continue to do this, right, we could just see manipulation and these lows never actually be ran. Dollar still looking to trade higher. Yeah, right, even 5 handles in here, just because it's a small range, 5 handles would be just a little more difficult. So now that we broke below this and closed right below this fair value gap, I would want to see us now accelerate towards this low. I don't want us to just keep on chopping inside of this fair value gap. We can trade up into it, tap it. Ideally, I wouldn't want us to see us trade into even like the midpoint. Just tap the low if you want to and then sell off. Jeez. NQ. Yep, NQ just slowly pushing lower. So even while NQ is trading lower, it's not like it's right selling off heavily. It's going maybe one tick at a time, one handle, then retracing, another handle, retracing. So it's very slowly just melting lower. So as you see, right, we tap into that high perfectly, just as we expected, and trade away. So I would want to see us continue to just trade lower from here. Or with how close we are to this low, that would kind of just be my target. We could have a situation though, if you were here in our live stream yesterday during power hour, right, where we fell maybe even less than one tick, I would say, from the low before retracing and just running out buy side. And with the way NQ's trading, right, just the SMT between NQ and ES, as well as the reluctancy to follow the dollar as the dollar rallies and ES doesn't want to drop. Like, just wary of potentially another scenario like that where we could see this low hold and could get some type of just crazy expansion, right, attacking our buy side. That's kind of worst case scenario though, right? For me, I'm still leaning towards I want this low to be taken out before any run higher. So dollar's retracing into a bullish volume imbalance. So I'm monitoring now, right? Does dollar find support at that volume imbalance and send dollar higher, which would support the ES going lower? NQ still all same thing, just continuing to melt lower, just slowly grinding lower. So, nice, there we go. So we attack our low, we actually don't clear it. All right, so we trade into it perfectly to the tick. So see if we create equal lows here, and then that next candle, right, dive through those equal lows. So the equal lows get created. Now I want to see it. There we go. So we attack these sell stops. Ultimately looking to see if these sell stops here get traded. And this is another way you can tell that we're in high resistance liquidity runs, right? Notice like this low, how close this low is with our higher time frame, I guess, objective. In low liquidity run conditions, as we take this low, because this low is so close, right, in proximity, you would often see us just clear almost both of these lows at the same time. So we would trade through this low and then attack this sell side pull. Even here, right, since this low, we create a lower low even closer to it. But when we clear this low, we're not clearing it, right, aggressively, trading through it with displacement and attacking our other sell side liquidity pools. We're barely sweeping that level and then immediately, right, retracing into the range, just like we did here. Barely sweep that level, immediately retrace into the range. So while we could still deliver to this level, and that's what I'm expecting, right, I understand that these are high resistance liquidity runs. And yeah, it just makes trading really not, I guess it could be more difficult if you don't understand what you're looking for. But at this point, it's not really more difficult. It's just more frustrating if you're trying to be in trades, right? And you have a target and you're just seeing price meander and give it a little bit, right? Take it right back. Give it a little bit, take it back. And that's kind of why I like trading in those low resistance liquidity run conditions. And it's also why I've kind of moved towards just targeting 5 handles. Because I know that I could, right, find that easily and consistently. And my personality is more of someone that I just like that to be in and out quickly. Right, I have kind of a low attention span or impatient, I could say, even at times. Which I've been able to master that in my trading to where I'm not FOMOing or taking bad entries. But once I'm in the entry, I don't really like to hold for that long. And there we go. So now our 15-minute target gets met here. Now do we continue to accelerate? We have this 15-minute fair value gap here. Set and forget. Yeah, I feel that, the set and forget. And yeah, that's definitely a valid way to do it as well. See how many people can, right? They get in and then they kind of screw themselves over. They get out too early, or they move their stops, or they close the trade before it runs in their, position or to their target. So a set and forget method isn't too bad. I've messed with that, but personally, just for me, if when I try to like set and forget my things, now I just worry about it like the whole time. So it's kind of ironic, right? Because while it's supposed to help me or really help the trade and not worry about the trade, if I'm in a trade and I'm just kind of like away from the screen and not monitoring it, I'm kind of like thinking about it. And that's also why I've kind of limited my trading hours from 8 to just 11 too. Because then it gives me that 3-hour window of time to where I can know I could just be fully focused on any setup that presents during that time, right? I have nowhere to really be. So if it traded, so as you see, right, we just trade through and below that fair value gap now. Notice right where we close on this candle, right, we open up at that high beautifully, and then in one fell swoop, just boom, attack that low. So now, right, we're getting that expansion lower that we've been waiting for. So ES has been, or NQ has been selling off all morning, while the dollar's been rallying, and ES is finally starting to catch up. Let's see what else we got. So now we have this 1-hour fair value gap lower here. If we want to continue selling off, right, we would look for now this 15-minute bullish fair value gap to act as our inversion fair value gap. So I wouldn't expect price to trade any higher really than this level, especially if we create this, right? So if this fair value gap stays open, this is where I would look for price to trade into, find respect here at this PD array, and then sell off into our lower objective. Yep, same thing. Yeah, early on when I would do that set and forget brisket, I would just, yeah, I would set my alerts. And like I mentioned before, I'm a huge gamer, so I would just try to like go play my PlayStation or some shit like that. But no, I don't know what it is. It just, I would always be drawn back to it. I would keep looking at it. So I figured, right, if I know that I'm gonna want to look at it anyways, I might as well just refine my model to be more of a scalper, right? So I'm in and out, so I could be in front of those charts and really see the whole trade play out. So we tap into that 1 minute fair value gap. Just watching, right? Do we create the institutional order flow entry and continue to sell off? Right, once that 1030 candle closed, so we have that 1030 candle closing here. This is that 1030 low. When I see this low get broken, right, price starts accelerating because now from 930 to 1030, that's kind of our opening range that ICT teaches. So if you want to take the high between, let's go, just so I could show really, so at 930, right, and this is kind of what I do to help me understand the market a little better. So between 930 and 1030, I'd look at the highest high and the highest low that was formed, or the lowest low, sorry. So 1030 is right here. So I take the highest swing high, which is this one, and the lowest swing low, which is this one, within this hour time frame. And if I see price, right, break below one of these swing points, then that's kind of an indication for me that the remainder of that morning session will continue in the direction that we broke. Right, so in this scenario, as we create that swing low just at 1030, honestly, and we break below it, right, notice how once we break below that, then price finally starts accelerating lower because we've put in that opening range. So as we break away from that opening range, that's kind of how I expect, right, and help myself create that bias of I would be looking for lower targets the rest of the morning because we broke below this low that we created right in the first hour of that trading day. Because of that, if I was to see us start like trading higher, right back up into this range, then I would expect us to just consolidate and we wouldn't actually want to continue to sell off. Because that opening range has already been put into place, right? So now that daily range should start being put into place and we should start expanding into our objectives. So just trading inside that 1 minute fair value gap as well as right the 15-minute inversion fair value gap. Right from the high or the low of this fair value gap into this fair value gap. So about the midpoint, right? That would be like our 5-handle run. So that's kind of how I go about creating those setups for myself. I would see, okay, if I enter right at the low of this fair value gap, 5 handles sends me into what? Sorry, I don't know if you maybe hear the freaking lawnmower right now. Got some people mowing our lawn, but hold on, let me close this window. Can't even hear myself. Jeez. So yeah, as I was saying, right, when I'm looking at potential trade setups, I'm framing it out as if, okay, so if I were into here, 5 handles would take me where? Right into the consequent encroachment of this lower fair value gap. So seeing how those kind of like line up right with another logical area, I would be fine entering at the low of this fair value gap with the stop just above it. Right now I would target those 5 handles, ultimately leading me into now our lower fair value gap here. Just to be, let's see, shift. Yeah, 5 handles would put us at 4103, so just above that consequent encroachment. I'm seeing that. Yeah, so that 9:30 to 10:30 range, he actually has talked about it. Damn, I don't remember which month it is actually. But yeah, I got that from him. So I mean, it definitely is on his YouTube. So right as we take this low, so from my entry here at this high to this low is 3 handles. So as you see, right, that's when I would take just a partial at that low. Stop now gets brought to break even. So right, our entry would have been the top of that fair value gap or the low of it. Stop just above the high. So after trading into right and through that low, stop then goes above the swing point. After trading into this fair value gap, stop would then be below break even. So no risk. Another partial would have been taken because we just fell 1 tick short of right that 5 handle run. But still would just expect us to deliver into that 4103 level. 4100 whole number. What about 4100? Are you just asking if that could be like a logical area? Because yeah, 4100 could be targeted. Well, there we go, right? So we trade now into, and that's an example of right the 5 handle model that I like to operate within. Right, had a clear sell indication. We broke below right that opening range, so that 1030 open. We break below the 15-minute inversion fair value gap with displacement, creating another fair value gap in line with this inversion fair value gap. Right, that's why I was confident that we would find resistance here and trade lower now into our lower objective, which is just another right 1 hour fair value gap in a discount. And this is just the institutional order flow entry drill type of entry or model. Just yeah, 4100. I can see that. Honestly, that's kind of something that I kind of differ from Michael in, is that I don't really use like the numerical values themselves. I'm looking more at just the actual like structure and whatnot. So it'll make sense like 4100 could be traded into, right? I would be fine with just the low of that fair value gap being hit, which would be at 4102. If we were to trade below this, there's really no more inefficiencies here. So if we start accelerating lower, yeah, we could see a huge sell-off, especially right because we just cleared this high time frame area of importance. So that daily, right, we just cleared this daily swing point. So we could trade back up into, right, honestly, these inefficiencies down here. But that's still quite a ways away, so we'll see, right, if we do get acceleration lower. 4 hour looking like. So since we've actually traded away from right all these new week opening gaps, just gonna take them off. New week opening gaps, maybe. There we go. Just keep the charts a little cleaner. So notice right after trading into our TP, also right the consequent encroachment. Notice where the body closes on that, right? Perfectly, right at the low, or right at the consequent encroachment of that level. just pulling up this fib here. Looking at where we are in this range. So I'm looking for the optimal trade entry. Right, we're trading into that optimal trade entry if we want to remain bullish. So just help me gauge, right? We've traded now into our discount targets. So from this level, I just want to see more price action before just reaffirming my bias. Right, because I really could see us going either way. Now I could see us after tapping into this level, trading higher, just trading back into that new week opening gap. But say right, we trade below this with displacement and really just start accelerating, then I'll have just more sell side objectives lower down here. So at this point, just 50-50 for me. Right, we already called out the move that we were looking for and expecting, and that played out well. So like right in my regular trading, at this point I would be done. So like 11 o'clock, I don't trade anything after that. So after trading into right our lowest fair value gap that we were targeting, I would call that a morning for me, and then just be content with that, and yeah, walk away, go do other things, and come back in the afternoon. But we'll stick around just till about 11 o'clock to see what occurs. NQ just continuing still to melt. Dollar continuing to rally. See, honestly, if we keep this up, let's see. So daily. Trading up into this balanced price range here. Right, notice the body's respecting that BPR perfectly. So just between these PD arrays now. Right, as we mentioned, after delivering into our sell side objective, what can we expect? Consolidation. Do you ever use market orders? Yeah, so like when I enter, so my original entries are often limit orders because I like having that framework. But like if you go back and watch like my executions, right, when I'm adding positions, so after the initial entry is taken, when I'm stacking positions, those are often market orders. So limit order for the original entry, and then as I stack positions, those will be market orders, just because right, I'm watching price and waiting to enter until it enters my level of interest again. Candle body still just respecting that BPR beautifully. Could send us down into another leg lower to clear out this low. Possibly trade into right and fully reprice now this hourly fair value gap. Here. And Q doing the usual this morning and just still continuing to melt lower. Geez, yeah, NQ's really melted this morning. Dollar's starting to consolidate a little bit more though, so yeah, we could see this area be our area of consolidation. Right, if we clear out this low, could see it just a quick little sweep and then consolidate into that lunch hour. So now that low gets taken. NQ, what's NQ doing? NQ just going lower. So yeah, NQ really has been no help this morning, but very one-sided. So if we create that bearish volume imbalance, notice though, right, where this closes and where this opens. So we create that volume imbalance, we jump right into the low of that fair value gap, and then immediately, boom, react away. Well, things like these aren't like entry criteria or anything, right? This is just what I've seen over the years that just reinforces my confidence that, right, this is controlled algorithmically, and just seeing like the fingerprint of the algorithm, right, really just boosts the confidence I have behind my trades. Because I understand, right, the why that I'm using to enter trades is really the truth, right? I'm not just entering based off patterns or retail concepts. And that's just why I enjoy trading these concepts so much. Is that even in days, right, where price may be choppy, nothing is ever a surprise anymore. And that's just an empowering feeling when you know that, right, you could always look at the market and understand what's going on. And that doesn't always mean that there will be a trade, right? But it does mean that I'm never confused at what's happening. There may be times where I don't have a clear bias, right? But that's not confusion. That's simply me just needing to see more price action and refusing to right, fall into that retail mindset of I always have to know what's happening or else I don't know how to trade. Dad, I'm weak. I appreciate that, Brisket. Putting a lot of work to really just understand, right, these concepts. A lot of hours. Easily put in my 10,000 hours. So it's been a grind, but yeah, I'm glad of, you know, their level I've been able to reach. And it's definitely all a thank you to Michael, man. His concepts are something else, that's for sure. Or I mean, like I said, it's my belief, right, that the things he's teaching are the truth of how the market moves. Right? It's the real why of what the market is doing. So yeah, we trade into that low beautifully. Now I'm just watching, right, do we consolidate here as mentioned? If we break back above this high, creating that market structure shift, that would be our YouTube model. And yeah, I'll just look for higher prices then at that point. Especially, right, notice what time that we took this low out. Right at 11. Right, so time then price. That's another thing too. The time itself is a huge factor in just the way that the market will operate. Right, as I mentioned, it already helped us today, and that's kind of why I was okay with going short. Understanding, right, after our time window of that initial hour of trading, if that range gets broken, right, I can look for a continuation in that range the remainder of the morning session. I like stopping to trade at 11, right, because that's like the London close. So while this isn't Forex, there are still London traders that, right, trade ES and will wrap up their day at that time. So that's why I like closing my trading day at 11. And as you see, right, it's no coincidence that right at 11, right, we have that macro, so price delivers into sell side. Are you only looking at the opening range? What do you mean by that look, I guess? Are you only looking? So you're asking like, am I only using the opening range if it's like a consolidating day? Is that kind of what you're asking? Okay. Yeah, so I mean, it helps me more often in consolidating days, but I'll use it really any day. So like say we're in like a very trending day. So like we can go yesterday morning was pretty trending. So like let's go to yesterday morning. It's on a higher time frame. So right when we had a trending day like this yesterday, same concept applies, right? So that opening range from 9:30 here till 10:30. So now I go back to a lower time frame. So this opening range here, right, even though this is kind of a consolidation, but this was more of a clean trending sell model day. Still the same thing applies, right? We have the highest high and the lowest low formed during that opening range. So as we break below now this swing low, what do we get, right? Just continuation of that trend the rest of that morning session. So I can use it really in regardless of kind of what kind of day it is. It's just more of a way to decide, right, what direction price may want to continue heading in following that opening range hour. Can you pre out this current price action? Oh yeah, for sure. So, oh, and decent. Sorry. So the indicator I have for these is actually called JWT sessions. This one here. Right. So it plots my kill zone, so that trading hour from 8:30 till 11, and then it also plots that 8:30 opening that I like to use. And brisket. So this right here would be the YouTube model forming actually right now. So we've cleared this swing low. Short-term low gets cleared. Now this is a swing high, but it also broke this swing high. So I'll just use this one here. It's a little more prominent as I break in structure. Right, so if we want to remain bullish, right, if you look, we have a tiny baby fair value gap right in here. That lines up basically with this order block. So that's why I would expect just this level here to hold. Right, that also lines up with this order block. These last two down close candles, right, is one consecutive order block. So you'll notice, right, how we mentioned in the old videos, the high probability order blocks line up perfectly with that fair value gap, as you see here. So right, this is kind of would be the framework, right? And we understand that we cleared a short-term low while trading into an hourly fair value gap, trading off the low of that hourly fair value gap. Right, dollar looks like it may want to continue to rally though, and that is kind of the only thing that would, right, make this a not the best trade. Is that if dollar wants to continue to rally, right, ES would follow suit and sell off. But just with the way that things haven't really been lining up this morning between them anyway, this would still be a fairly good area to enter at. Especially, right, because notice how this balanced price range that we used bearishly, if I extend it out, also lines up perfectly with the order block, with the high of this candle, swing high, with the high of this fair value gap. So a lot of things, right, coming together in this one area that would suggest bullish prices. And if we do want to retrace now, right, because we hit that 11 o'clock hour, so we could retrace into lunch. If that's the case, then right, this swing high here that we formed on the original entry would be kind of target number one. So it's right in line with that consequent encroachment of this inversion fair value gap, and then we still have, right, that small fair value gap that was left open that we never filled in fully. So that would be the draw on liquidity. And luck. How did you use the opening range, luck, if you don't mind me asking? Just curious. Like, were you doing like breakout trades if it like traded above or below it? So we trade into that area now. Now, right, I would want to just watch and see how does price react here. So right, even from here, 4105 to this consequent encroachment, right? So the high of this fair value gap would give you another 5-handle run. For me, right, if I'm for an entry on this trade, stop would go below, for me, right, this candle here. So this would kind of be seen as my order block. There's no lower inefficiencies that I should be worried about. So really, right, if we want to remain bullish, price would have no reason to trade below this black candle, the down close candle. Especially because we have the high now of this 1 hour fair value gap. Beautiful. All right, so just as we expected, as you see, we create these equal lows just in line with that level. Come down in to sweep those lows, returning into the fair value gap, order block, balanced price range, right? As we mentioned, multiple things in this area lining up to lead to higher prices. Barely tap into that, close above, and then immediately just boom, reprice now into right this higher fair value gap that we mentioned. So we'd want to see now, do we reach into this high? Looking to close, right, this CB that we left open from earlier. Ultimately trading up into, I mean, we could trade all the way back up into this range. As I mentioned, right, we have the low from that 1030 range. So if this low was to get traded back into and we start trading up and higher through it, then I would expect kind of this to be low of the day. And we need to come back in the afternoon to see if we wanted to start moving towards that. Boom, and there would be another 5 handles. All right, so just so you guys can see, from that fair value gap, right, as I mentioned, stop would go below this candle. If you're still worried about that, right, you can go at least below the consequent encroachment then of this hourly fair value gap. So if you were nervous about right that, then you could widen it out a little bit. Still under 3 handles, but yeah, I was confident that the down close candle would hold. So stop just below that, right? Targeting a simple 5 handles would take us actually to the high of this here, which we're approaching now. So we'll see if we hit that. Right, first partial for me though would be this swing high. And then the high of this fair value gap lines up perfectly with those 5 handles. So that would be another good framework for me. Right, as I mentioned, I like my targets to line up with just logical PD arrays. So if I see, right, okay, the target lines up with the high of that fair value gap, price most likely will want to at least trade into that once. So it makes sense to have that as your target. After trading above this high and through this fair value gap now, right, I'm expecting this fair value gap to act as support. Right, we have this tiny fair value gap that was left behind here. Let me move this. That tiny fair value gap left behind here. Right, so while we could trade into that, ideally I would like to just honestly leave that open, find support here, just tap into that high quickly. If not, right, that's fine to trade into this. This one here, however, though, right, I would want this one to be a breakaway gap fully. So I wouldn't really want to see price trade into that. Look at that, right? So we respect this. Just want to see, do we tap into that high? Create these perfectly equal highs here. So, boom. And there we go, right? So there would be that 5 handles that you just get in a quick little, what is that? So from entry till exit, 5 minutes. 5 handles in 5 minutes. Can't complain about that. I feel that brisket. But that's the thing, right? You have to learn one thing first, and then you could start learning the other things. right? And that was how it was for me, right? At first, I didn't, all these things I'm pointing out now, right? All these confluences, it wasn't always like that, right? At first, the only thing I was really able to notice would be like the fair value gap. So sure, I might have noticed that, oh, right, we did leave it behind a fair value gap here. But that's like really the only thing I would see where I wouldn't have realized that, okay, well, we also have this order block, right? We also have this balanced price range that we're trading now back above. We also have just cleared short-term low in liquidity, right? We've also traded into a low of a higher time frame discount fair value gap, right? We also have intermarket relationships pointing towards higher prices in ES. So over time, right, you just continue to build that backlog and knowledge of ICT concepts, and you could start to mesh them all together. Which is why now, right, I don't necessarily have like a specific trading model where it's like, right, like the YouTube model in itself, right, this is a trading model. So I don't have one specific trading model. I understand the concepts, and I use the PD arrays and the concepts to get me in, right, where I expect price should hold. So really, if you think about it, I guess I would have like multiple models. So I have like the YouTube model, the breaker model, the order block model. He's gonna get that interview. You're on me weak. I don't know about that F98. I have thought about it, but I mean, personally, I'm just a very private person, right? Even doing this was kind of a step out from my comfort zone, which is why it's kind of taking me so long to even do something like this. Which is also why I don't show my face. But yeah, when ICT said I'll have to see you, I'll have to show your face. I'm like, damn, tough. If I could just talk, that'd be dope. But we'll see, we'll see. I kind of have like a own certain plan of I'm waiting to really like step out there fully until I reach a certain trading goal as far as trading profits, and I haven't hit that yet, so I'm gonna wait. What do you consider as an order block? So an order block for me really is, I mean, as he calls it, a change in the state of delivery, right? So when we open here, right, and we continue selling off, so we create this swing high, and we attack this sell side. If we trade back above the swing high, then I'm seeing that right as a change in state of delivery. So from this point, we were bearish, targeting sell side objectives, right? After delivering into our higher time frame PD array and then breaking above, right, this level. Now I would expect us to be in a buy program targeting buy side objectives, utilizing that level, right? So once we trade through it, the algorithm kind of understands that really and flips into that buy macro, and that's what creates these order blocks. Right, and then if you pair that with like when it gets passed through with a fair value gap, as you see here. So even though it's just a small one, right, we passed through the order block opening with a fair value gap, then that kind of creates the high probability order block. So you'll notice, right, after trading into that high perfectly to the tick, what do? Trade back below it, trade underneath it. Now we're finding resistance here at this inversion fair value gap that we used to send us into that high. What's up, Luck? I saw you added me. Facts, Omar, that's why my name was Shadow. Just a shadow. That's all I'll be. Premium discount. So yeah, so a premium and discount really is formed off of the range, right? The most recent dealing range that we're in. So like in this instance, so from this range high to this range low, right, if I drop a fib on that, and when I'm doing premium and discount, I'm using the wicks. So if I'm looking at like OTE or something, I'll use the actual bodies. But if I'm just trying to find the range, I'll use the actual wicks. So, right, so from swing high to swing low, this becomes our premium and discount of this range. So if you see right above 50% is a premium and below is a discount. And really the way I kind of use it is if I'm looking to short. So say I'm looking to short and go lower. Now, right after we've put in this range, I would kind of look for the 50% to be traded into. Unless we got some sort of like really bearish price action that pointed towards lower prices now. Right, I use the premium and discount as just a more of a roadmap, honestly, to help me understand where I'm at in price. Right, and these dealing ranges can change often. So while this is one dealing range, right, you can also look at, okay, this in itself from this low to this high is also, right, a dealing range. So now we can look at, right, this below the 50 would be a discount, anything above would be a premium. So it can be kind of, I guess, kind of confusing if you're using it for like all the time for targets and all that and whatnot. Me, I don't really use it that much anymore just because I can kind of see right when we are in a premium or a discount, and I'm relying more on the actual PD arrays that are forming rather than the range itself, if that makes sense. Yeah, let me know if there's more that I can help you with on that, because it can be a kind of a confusion topic. Using the same way. Yeah, I can feel that too, and that's kind of why when the range high low. Okay, I see what you mean. Yeah, and that's why, right, this idea of like a premium and a discount dealing range is really there for like new traders that are kind of really just starting out as a way to help filter, right, like losing trades that you may not want to be in. So like if I was looking to like go long or short and I see that I'm already in a premium and I'm trying to buy inside of a premium, right, that is kind of where it deters you from doing so. But yeah, kind of like I mentioned, I don't really ever pull up like my fib and measure, well, am I in a discount or am I in a premium at this point? Just because, right, I've internalized that within price action itself. So I just use, right, what I see in price rather than, like I mentioned, that fib level. So in this case, you don't have to change time frames. Right, yeah, so I don't have to change time frames. Like I've spent so much time on these lower time frames, right, that I can see almost like the higher time frame structure while I'm on this time frame. So right, so while we have like all these market structure shifts and higher and lower, right, on the higher time frame, I understand that, right, we originate here, oops, right, this is just a swing high to create a swing low back up, right, so on a higher time frame, this is our simple, just bearish structure that we're looking at. On a lower time frame though, right, it does look choppy, confusing, back and forth. But I'm kind of using my understanding of like market fractility paired with, right, the fact that I could see higher time frame structure while I'm on this lower time frame. And that's really just something that came with years of, just sitting here in front of the charts, seeing it over and over. Definitely just something, yep, just something that the eyes, right, once you see it enough times, the eyes get used to it and it just becomes second nature. And that's also why I spend so much time on like the 1 minute. Like it's kind of funny because like, I guess I use Twitter to post things, but I don't really interact as often. But I will like read just posts and things like that. And you see a lot of people say that, right? The 1 minute is confusing, or you can't really trade the 1 minute, or you should stay off the 1 minute, focus on the higher time frames. And while I definitely agree that it can be challenging and there's a lot of fake whipsaws and all that, right? It's really just because they don't have enough experience to navigate it properly. I mean, as you saw, right, we were on that 1 minute basically this whole morning, and we were able to call out all these moves really beforehand, right? Forecast what we expect to happen, which areas should hold price, which areas should act as draws on liquidity, all while on that 1 minute time frame. So as you see, right, trading just in between now this range. So we have two fair value gaps. We traded from the low up to the high perfectly. Once again, right, algorithmic signatures. It's not a random run up. We're trading from a low, so from a discount to a premium. And that's what I mean when this in itself, right, is a dealing range. Even though it's a smaller range, right, discount to premium is our dealing range. So now we could just look to really consolidate around that equilibrium, right? So that 50% point, we could see just consolidation between that. What should be the move for trade? Since there was already a market structure shift, a higher time frame is buy, bearish. Right, so that's what I mean when you really just want to see more price action. Like from here, right, I would be leaning bearish just because we traded into the high of this fair value gap. We break below and through it, closing with the body of the candle. Right, this inversion fair value gap then gets respected beautifully, right? Notice the bodies and the wicks closing right on that high. And now we're trading lower. Whoa, look at that. As we're saying it. So yeah, we get that dive down. Honestly though, I think this low will hold, at least until lunch. I'm seeing us, I think we'll more likely just kind of consolidate within these two PD arrays and in this range. Right, we could continue to sell off heavy and attack that low, but I would be out for the morning already. But I guess this is also why, right, the lower time frames are tricky, because if you did see this, right, this is a market structure shift. So after seeing this leg up, you could probably think that we would want to continue running higher. So you may be trying to buy. But right, you understand that we were only running higher from here to trade into what? This higher fair value gap and the fair value gap that was left behind. So, right, so I'm not necessarily looking for us to target, right, and just run crazily into all these imbalances or start clearing highs. While I was looking for a run up, it was simply into, right, this logical area of that high of that inversion fair value gap and the old swing high we left behind. So after we did that, then we get another, right, bearish signal. So we have a short-term low here cleared, market structure shift, and I see, right, these algorithmic principles showing that, okay, we're respecting this inversion fair value gap, right, price is refusing to trade any higher after trading into and fully rebalancing the high of this premium fair value gap. Well, now it just makes more sense that we'll return into the range that we created, especially with it being right near that lunch hour. How to be confident with market structure shift might be fake. And I guess, yeah, so that's where, right, as a new trader, there is things that you just really might have to, right, commit to that time and submit to it. To where you may have to just stay on the higher time frame because it will give you clearer indication of like what we're reaching for. So wait until, right, those higher time frame areas get traded into before looking to enter on lower time frames. Whereas like, right, if you're looking at this higher time frame 1 hour fair value gap and you're thinking that we might have a buying opportunity from it, right, then you stay on those higher time frames until we trade into it like we did here. Then you could come to that lower time frame. So once you see that market structure shift now on a lower time frame inside of our higher time frame PD array, that is really how, right, you can start to trust those lower time frame market structure shifts. Because oftentimes you'll get plenty of market structure shifts that aren't inside of, right, valid, I guess, reversal points or higher time frame areas of interest. Can you share your music playlist? Sure, brother. I don't have like I just have like a Spotify that all the songs I listen to are liked. But yeah, I could probably do that. It's not like a certain place. I'm guessing you're talking about the like just the music and the beats I have for my Twitter. I could do that for sure, yeah. Good to know y'all like the music. I'll just be chilling. That's comedy. Hell yeah. Then yeah, I could definitely throw some tunes out. Honestly, I'm listening to music right now, so like when I'm playing, like I have music on in the background almost all the time. I'm a super music fiend. Gotta be borderline autistic, can't cap. Because I literally have music. If I don't have music playing on, I feel like, I don't know, uncomfortable. It's kind of weird. So there's always like in my headphones, or even like when I'm just walking around the house, I have multiple speakers throughout the house, and they're just playing music. So notice where we trade into. right? The original fair value gap, order block level. Once more, look at the body, algorithmic fingerprints. Just love to see that. Even here, right, we close on the low, then we open, we create a huge volume imbalance, open here. But right, we come back and still trade into the high of that fair value gap beautifully. Cool. Okay, take care, luck. I use video game music. Ah, that was comedy. Nice. So we deliver into that high once more. Yeah, we'll go ahead and wrap this up here, fellas. Extra little half hour than we expected. But yeah, good morning. Hope that was helpful as well. I once again, I gotta be better at starting the recording. I have the recording, but I started it a little late, so you may not get the whole opening range, but definitely at least this last hour should be recorded, so that'll be nice. But yeah, until then, tomorrow I won't be doing any type of trading or anything like that tomorrow, but we might just hop on quick and just have a little short live stream. Right, NFP this Friday. So as I mentioned before, my protocol is really after this morning session. I just kind of sit on the sidelines until that following week. But yeah, I'll let you guys know if we still gonna do just a live stream as well. Until then, any question you guys have or anything, just let me know in chat, and I'll do my best to get back to you as quick as I can. So yeah, take care, fellas. Have a good rest of the day, and I'll see you guys around.